Yo, 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 yo. Hey, guys. Welcome back to another amazing edition of the Best Practices Show podcast. Happy Monday, everybody. I hope this week is a great one for you. And every Monday, we do something called Metric Mondays. A little bite-sized piece of information on some data to improve your practice and improve your life. And last week, we talked about gross profit. This week, we're going to talk about true profit. Now, I hope you get this right because I got this wrong early in my career and it caused a lot of pain. True profit is what you actually take home. And that's very different than gross profit. So please listen up. Hope you guys enjoy this and we'll see you soon. Hey guys, welcome back to the Best Practices Show podcast. Hope you all had a great weekend. You know what it is? It's Monday today. Happy Monday. Hope you guys are enjoying your day or your day's off to a great start. And you know what happens on Mondays? I should have some theme music playing. It's called Metric Mondays. Dun, 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 dun. And I have my cohort, our CEO, Dr. Barrett Straub. And every Monday we go through one metric that if you use it, it'll change a lot for you in your practice. We're not only going to tell you what it is today, we're going to give you countermeasures, and these are all designed for bite-sized pieces of information that you can use right away in your practice. So, Barrett, thanks for being back, brother. Happy Monday.
Pleasure. Happy Monday to you.
All right, where are we going today on Metric Monday?
This is a good one. This is a big one. It's called true profit. It is the money, the amount of dollars that you can actually put in your personal checking account. So let me start here with true profit. Let me describe a scenario that I experienced as a dentist, and I can almost guarantee every private practice dentist owner listening has experienced this. You meet with your CPA after the first quarter of a year. He or she brings a P&L, and you sit down and you look at it, and you look at revenue and overhead and all the different percentages of each category. And at the very bottom of this financial statement called the profit and loss statement is called net profit. And often that number is like, good, like there's a lot of money there. And you're like, wow. And he or she says, you're doing great. You are right in the average where you need to be for overhead. You have a nice salary here. And there's a lot of net profit left over. And you're like, wow, that's awesome. But there's this little anxiety that's creeping up because you're like, that says $100,000. I don't have that in the bank. And you're like, what's happening? Am I being embezzled? Am I a bad business person? I don't know where that money's going. He's saying I should have $100,000 left over and I don't have it. Actually, I'm struggling to make payroll. And so there is so much of the financial story beyond the cash flow. Beyond the profit and loss statement. And what I, as a private practice owner, worked with my CPA, and he did a great job helping me, is to find true profit. Meaning, what is left over after I paid the overhead, after I paid myself the W-2 payroll salary, after I paid tax obligations, after I paid loans, after all of the outflows, there's a dollar figure left over where you're like, that's mine after tax. I can take that and I can put it into my bank account. Now, why is that important? This is the link between your practice success and your personal financial success. And often we see it all the time. We coach hundreds of dentists throughout the country every year. We see it all the time with what looks like and is a killer practice. And the dentist owner does not have a personally successful financial model. Yeah. There's a link between them, And there's more detail than any of us know in between it. And unless we know how money flows from production to collections to overhead to net profit to gross profit and into true profit, we can't successfully plan. This is the money. True profit is what you pay your house mortgage with. It's what you pay the soccer fees for your kids. It's what you pay the voice lessons for your daughter. This is how you pay your vacations. This is your money after tax. And so it's maybe the most important metric that we're going to talk about in this whole segment.
Yeah. Now I'm going to be super transparent because I've been on this journey for a long time. This is one thing, and I mentioned it earlier in podcast, I did not understand when I started ACT. It started to grow, and then I'd get my P&L statements. I'm like, this is awesome. Well, then I got this thing called a credit line. And I'm like, wow, that's even better, so we can invest. And so I used up the credit line. Then I started to repay the credit line. I'm like, well, that's going to lower my liabilities because I'm writing $5,000 checks out every single month. And what I didn't realize is that does not go against your liabilities. That's cash I'm using to pay down debt. And I'm like, why is that? That was number one. Number two, taxes sounds like a cool thing I kind of have to do. But the one thing I've learned is you do not mess with taxes. Tom mentioned this to me recently, who's our accountant here. He's brilliant. He's like, most people don't understand this, but taxes are unforgivable. You can actually die and debt is forgiven. If you die with a tax bill, they get it from someone. They go after your estate. Like, you cannot forgive. And the IRS, I'm going to finish the story on this. The IRS is so kind. They have these 32% interest when you fall behind. So early in my career, more than 15, 20 years ago, I got into what's called this tax snowball. So I was pulling money out. My accountant's like, you're doing great. Well, I thought I'd just pay taxes later and save some money. And I found that I got into the next year and I owed a tax bill for last year. And my accountant's like, you got to pay that now. So I was taking money I was earning this year, paying last year's tax. Now, the money I'm earning this year, I have to pay taxes on it. And I'm using that money to pay last year's taxes that also has a percentage built on it. And he looked at me and he goes, this is the most expensive money you'll ever spend ever. Like, it makes no sense. And I realized I got to get out of this. And what's really important is you have to understand what's below your profit and loss statement. This is a lifetime study. You don't just get this in a podcast. You've got to work it, rework it, know what it means, evaluate it. So Barrett, what happens in this area? What can I do now?
Yeah, and I'm so glad you shared your story because I also was in the tax snowball. So if you hear Kirk and I get fired up about this particular topic, it's because we both lived it and we made the biggest mistakes. And I also had a day where Justin, my CPA, is our CPA now. He's amazing. He cleaned up past sins from other accountants, said, we gotta make this right, and it's gonna hurt and it's gonna stink, but we're gonna do it right. And he taught me this stuff. And so if you're listening, Justin, thanks, buddy. After your net profit on your profit and loss statement, there are what we call below the line expenses. So last Monday, I challenged listeners that had any sort of loan through the business, meaning a practice loan or a technology loan or any capital expense. And I challenged them to say, you're paying that, go find it on your P&L, right? It's an expense. It's an outflow. It should be on your P&L as an expense. And I also said, you're not going to find it there. And the reason is that the money you are paying for any loan through your company is being paid with profit. It is not reducing your taxable income at all. It is paid with profit. So I talked about that scenario where this net profit number, I don't know where that is. It's because that number is now going and paying your practice loan and your CBCT loan. And oh, by the way, you take 10 grand in a distribution every month. That's pre-tax. So that goes against a distribution. So this is all IRS stuff. This isn't like your CPA didn't make this up. We're not making up. This is how complex the IRS is. And that's a whole nother debate that it needs to be this complex. But you have deductible expenses, which are on your P&L, and you have below the line or cash flow statement expenses that are outflows of money. But like I said, they're with your profit. Those include any loans. They include quarterly tax distributions. They include your distributions, meaning when you pay yourself through W-2 through payroll, that goes through payroll, it's taxes withheld, yada, yada. But when you just go take $5,000 out of the bank account, that's called a distribution, which is well within your legal means to do it, and you should do it. But we have to plan for taxes on that because pass-through entities, we are all, unless you're a C corporation, which you shouldn't be, everyone is going to be a pass-through entity, meaning the IRS says a pass-through entity means the income of your business is no different than your personal income. The income of your business is your personal income. The IRS, however you want to take that money, they're going to apply personal income taxes to it. And so if you take money in the form of distributions, you haven't withheld any taxes and you owe that. And so this is where it gets complex. And your head's going to hurt. And really, if we leave this podcast with nothing more than like, ooh, I'm armed with some really good questions for my CPA next time. And in fact, I'm going to call him today and have him explain this. Great, then we've succeeded in this podcast. But if you look at that net profit and you're like, I don't know where that money is, I guarantee you have some loans or other cash flow, whether it's personal distributions, other cash flow statement items going out. And you can determine that by printing. You've already printed your P&L. Now I want you to print your cash flow statement. And part of that cash flow statement is going to say financing activities. And this is where you're going to find all this stuff. And you're going to see like, oh, that's where it all went. And you're going to see exactly why your bank account doesn't match the bottom of your profit and loss statement. Kirk, later on here, this is such a, my heart, I have scar tissue around this issue, so I got to settle down.
I do too, and part of it is if you're listening, you have to forgive yourself because when you really start to learn this, you can get angry. You can actually start to doubt yourself, and I did. I doubted myself. I'm like, this is just too hard. I can't figure this out. Now, you mentioned something about distributions. That is just a very dangerous process. I did what my accountant said. I processed my family payroll. I had my wife on the payroll. We're paying taxes through this payroll thing. And then I was grabbing money as I needed $5,000. I needed $6,000. What I didn't realize is there were tax implications on this money. And I had an accountant who was like, don't worry, we'll figure that out. You won't pay the regular rate at that. And you start to believe those things. You don't mess with the IRS. And what Barrett's saying is like, I'm going to tell you right now, I've been here a long time. There's only one way to do this, the right way. You can't mess with it. And the other thing that happens for those of you that are going to transition in a couple years, you can say what you produce, what you collect, what your P&L statements. If you ever sell your dental practice to a buyer, they're going to find out exactly what your true profit is. You're going to go, no, that's not true. And they're going to go, yes, that is true because we're looking at what you actually have here. And so here's what we've done. Now, you might be stressed out, but here's the bottom line. Barrett was the engineer behind this. We actually have what's called a financial gaps calculator, which we take every single thing from gross production, which is potential production, potential collectible production, from write-offs to collections. It's the rest of the story that your accountant and you don't know. It is from top to bottom. So you can actually look at it. You can see what happened in January. You can see what happened in February. What's really fun is you might think this is really hard, but as soon as you fill it out, you go, oh my gosh, I had no idea. You can see the implications of your write-offs on your overhead, which leads to net profit. Because here's what's going to happen. You're going to take this podcast and you're going to go, I got to figure out what my net profit is. But you have to be able to diagnose the story that leads to your net profit. Because if you don't, you're just going to get mad at everybody. You're going to get mad at your spouse for spending too much money. You're going to get mad at your bookkeeper for not doing this right. You're going to get mad at your team because you pay them too much. And that is not healthy, my friends. Our goal here is to give you really clear perspective on where this money goes. And you have to know what true profit is, my friends. Any last thoughts you have, Barrett?
Yeah, let me just give one very real world example. Let's consider 1 month in your dental practice. You have revenue. You paid your overhead expenses and you paid yourself your W-2 salary. And so at the bottom of your P&L for the month of March, it says net profit 10 grand, meaning there's 10 grand left over after all your expenses are paid and you paid yourself. Okay. You're like, great, I made an extra 10 grand above and beyond my salary. Okay. But the IRS looks at that 10 grand as income. So you owe 4 grand on that 10 grand already. And ideally we would say, once we get further into this, we're going to say, you're going to take 4 grand, you're going to put it in a separate bank account so that you have that money to pay taxes. So now your tax allocation is 40%, just roughly speaking. Everyone's going to have a slightly different 10 grand left over, but I'm going to roughly owe 40% of that to taxes. So there goes 4 grand. There's 6 left over. Okay, but you bought a CBCT 2 years ago, and every month you pay 5 grand on that CBCT. That's paid with profit, so now that goes away too. So now 6 minus another loan of 5, you have $1,000 left over in true profit. But last week, you went in and you took $2,000 for a quick distribution because you owed a little bill and you didn't quite have it, so you just took it out. Now you're negative 1,000 true profit. So that's just a very real world that I went through example of, if we don't understand that we have taxation on our net profit, if we don't understand that that $5,000 loan actually reduces our true profit, if we don't understand that that quick 2 grand that we went and just took out as a quote unquote distribution reduces our true profit, we can get into some trouble. But once you know that, and okay, I'm going to have taxes and I have these loans. And then when you have 20 grand left over at the end of the month, you're like, oh, I got some true profit. That's amazing. I'm going to save that for that vacation we're talking about. So it's control over your money and knowing where every dollar goes. And it's a really good place to be, regardless of what your production collection is. It's all about profitability.
Yeah, I'm really struggling because these are supposed to be short podcasts because I have so many thoughts on this.
I know.
We are passionate about this. We coach a lot of dentists, and it's unfortunate that some of the cases we get are after the fact. So if you're listening to this and you're driving to work and you're dreaming of this beautiful building with a whole bunch of extra ops and you haven't figured out the PPO thing and you're going to get an associate to quote unquote scale, I'm going to ask you to pause and breathe and figure this out. Here's why. We get dentists all the time that think, I'm going to grow, I'm scale, I'm going to add other dentists, and they're writing off 40%. And they add an associate that they have to pay on that, and a lab bill, and all these other things. And they are in shared agreements. And so they are now adding producers and subsidizing their own salaries to grow this big practice. Now, here's the downside. You can't unbuild these operatories. They're done. Once you build them, you got to fill them. And there's no turning back. I'm not opposed to having a great practice, a beautiful practice, but we want you to do this the smart way. And when you use the financial gaps calculator that we have, you can go. You can actually ask Barrett. Barrett does this regularly. He'll do an analysis. Go, I don't think you're ready for an associate. And they'll go, why? This kid's in dental school. I've been courting him forever. He's ready to go. I'm like, but you're not ready to go because you have no money to do this. Now, we want you to have what you want to have. But here's the caveat. You have to be a smart business owner, and you have to know where this cash is, and you have to know where it all comes together. And that's why the financial gaps are so important. And I'm going to leave you with this thought. Barrett, anything you want to say before we wrap up on Monday? I feel like we got to pump people up on Mondays. I promise you that. Here's my commitment to you. Keep showing up on Metric Mondays. They're going to get more fun. Promise you.
Yes.
This is just one of those that I'm super passionate about, and I'm going to lean into this one. You can
progress,
have it.
Not perfection.
Absolutely.
Just a little bit of progress every day.
That's exactly. I mean, you're going to. This is why it's so fun. That's all you have to do. Once you fill out the calculator, you're like, this is not good. Well, then the next month, it's just a little bit better. Then the next month, it's just a little bit better. And now you're like, whoa, there's money in there. Wow, there's more money in there. You don't need to make it perfect. All you have to do is month over month, make a little bit of progress. And our hope is through this podcast, through the Financial Gaps Calculator, through what you're going to learn in the Best Practices Association. You guys, go back there right now, Best Practices Association. You're going to start the journey for free on the Apple Store. We actually have an app in Google Play. I don't know how the Android works, but if you go back there in Google Play, you can start the journey too. And we have all of these tools back there that articulate everything we've shared in the podcast today. We also have our To the Top Study Club where you can join for free. You could start that journey for free. There's nothing easier than free. It doesn't affect your true profit. Look at that. It's free. And
nice.
You like that? And if you've tried everything, you're just like, I've tried everything. I don't have time to do this. raise your hand. We have our pro coaching program, but that's for the serious students. If you really want to do this, we'll put a pro expert coach on your practice, and we will make you do this, even if you don't want to do it. And in about 4 months, you'll go, this is crazy. I know all my numbers, because that is our job. And it doesn't stop there. So we're here to help you every step of the way. Barrett, stick around. We'll say goodbye to everybody else, but thank you guys for listening. I really do hope you have a great Monday. Our job here is just to light the way. We love this stuff so much. So keep tuning in and we'll keep bringing it. So until you guys see us next time or you hear from us next time, keep watching or keep listening to the Best Practices Show. You guys enjoy your Monday.